Flip the screen, show me GameStop. They're looking to reschedule, up a bit, their annual meeting for today. Remember, it didn't happen on Friday. It was postponed. It was postponed because the online stream crashed after too many people tried to join. So they're trying again today.
That's fascinating.
We mentioned this Barron's piece over the weekend, looking at Gen Z, which is who they've grown up either in a pandemic or being told the planet's going to end because of climate, and as a result, their risk tolerance and their FOMO is extraordinarily high. Do you see that as sort of cornered into a certain element of the market that's not material to the broader market, or not?
Yes and no. I think most of as the parent of Gen Z people, I would say that they do have, at least my kids have an understanding of what's kind of real and what's kind of fake. The one thing I will say is when you're very young, you can take more risk. You can chase GameStop. You can chase these other situations. I don't think that's like part of a healthy, balanced diet, so to speak. But you know what? This is the age where you can eat junk food and get away with it. So they give it a try. But I'd like to think they come back to what I would consider more established type of investment themes.
Well, kind of related question at Interactive Brokers. What do you see in terms of retail sentiment right now?
Our customers love volume and volatility. That's basically where we see the action. But
we're not seeing either.
But we see it in individual names. So, Nvidia, GameStop, AMD, Tesla. These are like the perennial leaders. Well, GameStop is more of a recent one. And every so often you will find on our top 25 most active list some name that I have to look up because it went up, tenfold in 2 days, and everybody jumped in and started trading around it. So our customers are very trading oriented.
Are they losing money on those meme trades? Are they doing well?
I think it's kind of, I don't have any insight into whether they're making or losing money. The fact that they're still here means that they're
it's kind of zero sum on some level.
I think it's probably zero sum to some.
I mean, to Carl's point about Gen Z, I think one of the arguments is that if you feel like housing is chronically unaffordable, and I feel like I'm never going to be able to have that kind of orderly accrual of wealth, lottery psychology might as well take over. And I can either sort of look for the long shot and bet it, and I'm okay if I lose, or I can maybe hit the score and I'll be one of the lucky. Crypto too is kind of fed into that.
Crypto is entirely part and parcel of that. And I will say one of my Gen Zers is basically does social media for a range of crypto companies.
Oh yeah.
And my comment is, what do your customers get out of it? But he's doing rather well doing this because that's what they respond to.
Attention is the product.
Exactly.
Tesla has a pretty loyal shareholder following. So too does GameStop. So loyal that they're going to have to reschedule their annual meeting. It kicks off today, 12:30 p.m. local here in New York, Eastern Time. It was delayed last time because of technical issues. We're going to break down why with Bailey Lipschultz. And it was because too many people wanted to log on all at the same time, right?
Too many people trying to get in. Computershare saying that they had to reschedule it from Thursday afternoon, again, to your point, to 12:30 today. We had to resort to Twitch streams, YouTube streams, X streams, which was interesting because there were tens of thousands of people flocking to these channels that normally get maybe a half dozen people checking in on a daily basis. So people trying to find a way to stream it. So fingers crossed it goes off without any glitches today.
And why is there so much demand? I mean, who are we going to be hearing from? What are we going to be knowing?
No one knows. So when you look at last year's AGM, when Ryan Cohen, it was the first time as chairman leading this call, he spoke for about 90 seconds. The entire call.
90 seconds?
90 seconds.
Okay, blink and miss it.
The entire call lasted about 15 from start to finish. So no one knows what's going to happen. There's so much interest in whether Roaring Kitty, Keith Gill, could appear or be mentioned in any way, shape, or form. The company did raise about $3 billion through sales of new shares over the last 2 months. So will they address the cash haul that they have now, about $4 billion in the balance sheet? Will they address the strategy? No one really knows, and I think that's part of the reason that people have to tune in, because if Ryan Cohen appears, how long does he speak? Does someone else make a guest appearance? Or is it strictly business from some of the lawyers?
Now, having tuned into Keith Gill's own YouTube channel the other week, it doesn't seem like he knows much about the strategy of GameStop either, but he does seem to be moving around his holdings. He's changing his options into actual share ownership. That seemed to be pushing up the stock recently.
Yeah, there was some excitement around that. So we saw about a week and a half ago, he posted a screenshot on Reddit 5 million share stake, 120,000 call options. A couple days later, turned out he exited that call positions and reported north of 9 million shares. So that makes him a top 4 holder if we take it at face value, and is on paper worth, the last time he posted, about $262 million. So where did he get the cash from? How rich is he? A lot of questions and uncertainty around that he never addressed on his stream. But nonetheless, again, if you take it at face value, what he posted on Reddit, top 4 holder from a retail shareholder who back in 2020 was preaching GameStop, the Ryan Cohen vision, and short squeezes.
And let's just focus for a minute on Ryan Cohen, because if you haven't been a complete GameStop fanatic of the story or indeed the stock, why do we care so much about this individual?
Co-founder of Chewy, so a lot of people bet against that, said they would be Pets.com 2.0. Very successful sale to PetSmart, ultimately went public when he was no longer associated with the company. Made a pretty nice fortune from that. He took an activist stake back in 2020 in GameStop, then pushed and really helped trigger alongside Keith Gill in early 2021, getting seats on the board, pushing for changes, ultimately ousting pretty much the entire management team, and now is the chairman, CEO, and president of the company. And really the whole belief in GameStop with Keith Gill's thesis is that Ryan Cohen will be able to turn the company from a brick and mortar company that has shown slowing sales, has shown a need to close some of those stores and completely revamp the business. The question is, what does that look like? How do we get there? No one really knows, but that's the whole kind of group mentality behind the GameStop bulls, the retail investors who really like the stock, is that Ryan Cohen knows. He won't tell us, but at some point this is going to end up working out, and that's really been why we've seen such a wild ride over the last 3 years. And you have to kind of, at some point, tip your hat, though, because Ryan Cohen in RC Ventures owns about 8.5% of the company, so he has put his money where his mouth is.
And he's put some money in the balance sheet of GameStop too, and that's meant Citron, for example, has just exited at short. Always great to get Bailey Lipshort's on all of the backstory when it comes to GameStop. Tune in.
And meme mania. GameStop holds its shareholder meeting today after postponing it last week due to technical difficulties. Stock's been on a wild ride lately. We'll help get you ready.
Meantime, speaking of annual meetings, we're about an hour away from GameStop's second attempt at an annual meeting. Our Kate Rooney's been tracking that action and joins us with more. Morning, Kate.
Hey, Carl. Yeah, so this is GameStop's second attempt at an annual meeting. The last one was derailed after online shareholder demand crashed the website. It kicks off around 12:30 Eastern. The last meeting back in 2023 took only about 15 minutes, and there was a statement from CEO Ryan Cohen, so we could hear from him again today, and we may get some more details on how this company plans to deploy its new cash pile. So the video game retailer has been taking advantage of this meme stock rally, issuing more shares, bringing in about $2 billion in that last round, and then shares, of course, have been wildly volatile as the now famous online booster of the stock. Keith Gill, a.k.a. Roaring Kitty, got back on social media. His posts have really sparked this rally we've seen in recent months, but his live stream recently also failed to deliver any real updates or news about the company or his strategy. He does appear now to be the 4th largest shareholder in GameStop. That was after posting a screenshot of his E-Trade account showing he now holds more than 9 million shares. He does appear to have sold his call options that were set to expire this week. The latest on GameStop's financials came from earnings. It disclosed a 29% drop in sales. So far, no real sign of any sort of operational turnaround, guys. Back to you.
Yeah, I guess investors should be listening for that as well. Thank you, Kate Rooney.
All right, we're going to move on to the meme stock mania. GameStop kicking off its annual shareholder meeting. Our Kate Rooney is monitoring the latest developments. Kate, what is the latest?
Hey, Frank. Yeah, so this is GameStop's second attempt at this annual meeting. The last one was derailed after online demand crashed the website. We did just hear from CEO Ryan Cohen. He says they plan to continue reducing costs, focusing on profitability, and he also says they have a strong balance sheet. Talked briefly about the macro environment and rising rates and said actions speak louder than words. They plan to deliver, but we did not get any specifics on that plan. It was a very, very brief statement off the top. There are a lot of questions out there about when GameStop and where GameStop is going to spend its new cash pile. The video game retailer has been taking advantage of this meme stock rally we've seen by issuing more shares. It's raised more than $2 billion, and it did recently disclose around earnings that it saw about a 29% drop in sales. The stock has been wildly volatile as Keith Gill, a.k.a. Roaring Kitty, got back on social media. His posts have sparked that rally, and he has been a vocal backer, of course, of this stock. Now appears to be the 4th largest shareholder with a more than $260 million position. That was at least as of last week, according to his screenshot. Frank, back to you.
Yeah, Kate, just looking at the chart, since that meeting began a short time ago, the stock taking a significant move to the downside. GameStop shares down almost 9% right now. Our Kate Rooney, great reporting as always. Thank you. Good to see you.
In that meantime, Game more like stopped. I don't know if you've been following this drama on the corner of Wall and Broad, but it's down about 14%, about 13% right now. We'll tell you what's going on there and whether the meme stocks are getting mauled all over again. All right, take a look at GameStop right now. It's down 11.5%. These stocks, meme stocks, whatever you want to call them, not for the faint of heart. Back with Scott Redler right now, the T3 trading chief strategist, very smart at this stuff. Scott, do you dabble in this arena, the meme arena, whatever you want to call it?
Listen, as an active trader, we dabble in every arena. Whatever is moving, we're there when there's volume and there's chart patterns. But, we're also very smart. We're not retail. We like to go in special situations. And if you remember, in 2021, there were like 25 meme stocks. The trade lasted 4 to 6 months. There was heavily shorted groups. And now the street's very smart. This whole meme trade, the GME and AMC, ignition or whatever you want to call it from early May lasted 2 weeks. So this type of trade is not interesting. I know everyone's loves to make a new story about this roaring kitty,
right?
But I think that he's left a lot of bag holders in the past. I don't think there are that many people following him, and you're not going to make money consistently over time following individuals like that without a process and a plan.
A lot of people follow him, though, because he has a stake in the company, and apparently he's kept that stake. Who knows what's accurate? But you follow momentum, right? If the momentum's there, maybe. If not, maybe not.
Yeah, I look at it from time to time, but it's a very small part of the trading plan. Listen, they just raised $4 billion. They did 2 at-the-money offerings. The company has more cash than it's had in a while, so it's kind of interesting. There's talk that they're going to take a page out of Michael Saylor's book where they're going to turn the company into some kind of Bitcoin incubator company because they really have no business. So maybe that's a little interesting. So I'm going to keep an eye on it. At this point, I don't think people are worried about missing out. If you're going to be in it, don't be in the stock. Go out a few months and buy some options just in case there is some kind of crazy scenario around it. But don't waste your time. You could buy the $35 calls a few months out. Right. And if they do start buying Bitcoin, because they have nothing else to really do with their business, maybe, get some groups excited and maybe there's a trade there. But for now, this trade was very, very short-lived. And I think the market's a lot smarter than it was in 2021. There were too many bag holders. A guy like that can make money for himself, or you can make money once in a while. But that's not how you're going to make money consistently over time.
Got it. Always good talking to you, Scott. Thank you for taking the time. So Scott Redler on that.
GameStop's annual shareholder meeting is taking place today following a technical issue last week that cut the meeting short. Yahoo Finance's Ines Ferre has been following along. She joins us now for more. We even, I believe, got a few words publicly from Ryan Cohen.
Yes, that's right, Julie. He spoke at the top of the meeting in some prepared remarks. And basically what Ryan Cohen said, he's the chairman and CEO of GameStop. He said, with respect to retail operations, we plan to continue reducing costs and focusing on profitability. He also cited a smaller network of stores. We've known that the company has been cutting costs. He also said that, and this is really sort of the money quote where he sort of nods at all of the meme trading that has been taking place over the last month or so. We are not here to make promises or hype things up. We're here to work. Now, the stock is down 10% now, but it was down as much as 15% during the meeting. The company didn't say much as to how they are going to use all the cash that they have accumulated over the last few share offerings. Remember that in this past month, they have offered millions of shares and they have raked in about more than $3 billion in proceeds from those sales. The general counsel during the meeting said that they were getting a lot of questions about the future of GameStop plans going forward, but he wouldn't be commenting beyond what Ryan Cohen commented, beyond those comments that he gave at the top of the meeting. This all started really when we know last month when we saw the meme rise rally after Keith Gill started appearing on social media, and the stock has been on a real whirlwind. As far as Keith Gill, aka Roaring Kitty, he did post more than an hour ago a picture of John McEnroe. He's one of a famous tennis player from the 80s, known to be sort of controversial, so to speak, on the court.
So make of it what you will with that message.
I don't know what to make of that. He pulled a McEnroe. No, then he would be throwing a racket. McEnroe has mellowed a lot over the years. Fun fact. All right, thanks, Ignaz. Appreciate it.
Fox Business Alert: after technical difficulties last week, GameStop investors finally got to hear from the CEO, but they did not like his message, as you see from the stock, which is falling 9.5%. Ryan Cohen telling investors the video game retailer will be focusing on profitability by cutting costs and operating a smaller network of stores selling higher priced items. Cohen gave no indication of how GameStop will use its $4 billion in cash after it raised $2 billion following a share sale earlier this month. Charlie Gasparino is coming up in just a minute. He's got a follow up on what this means for meme investors beyond today. So we already showed you GameStop shares falling 10% today, but still quarter to date, they are up 104%. How long can that last after shareholders were disappointed today by CEO Ryan Cohen, whose messaging at the video game retailer shareholder meeting this morning was short on details? Charlie.
Not just details, and I think the real problem with this was it was short on growth, a growth plan. I'm going to quote Jack Welch, the legendary CEO of GE, who was once said to have remarked, "Any moron can cut jobs or raise prices." I'm not calling Ryan Cohen a moron. In fact, I know he's not. But you get what I'm saying. If your strategy to survive and to grow is to simply cut stuff, which it seems like, based on everything he said at the shareholder meeting, there was no growth plan. He was talking about need to cut. You got a real problem with your business. We should point out that, again, he failed to deliver a growth plan. It's a very problematic company. It sells video games in malls. Think about that. People don't go to malls a lot, and people generally don't buy these video games in these retailers. They buy them on this thing. Again, he didn't have much. He's talking about job cuts, not good. And we should point out that this is a company that just announced losses and has been pumped up by a combination of irrational exuberance surrounding roaring kitty back into the mix of the meme investor buying more stock and stock pumpers on social media. It really is a company that you scratch your head and you're like, are we still talking about this?
Well, let's get to the details. He said he's going to cut the number of stores. He's going to cut jobs. Meantime, they are now sitting on $4 billion in cash
that he raised.
Well, they better not increase compensation.
Now think about it. That's a whole other story. But think about it. How are they raising money? It's not like they're generating cash. They're literally diluting shareholders every chance they get. And so, again, I say with this is a problematic company. It's not that much different in many respects from AMC, a name, but not a great business for growth. And if you throw your money at this stuff, be prepared to be disappointed, as you have been in the past. I mean, by the way, that number, $4.89, is really 48 cents.
That's for AMC.
Yeah, that's after a reverse split. GME is, has a better track record, but it's off its highs. And, but before the Roaring Kitty thing, this thing was trading at like, I don't know, take a look at the chart. $12, $13 a share. I mean, it was down this year quite significantly, like 20-30%. So again, you go there, it's on you. But remember, this is, I tell people that, if you ask me about trading and gambling, I mean, yeah, you can do that. It's fun. But if you're betting your life on this, and a lot of people think that these are get-rich-quick schemes, they often lose their shirts, and they've been losing their shirt for a while. I would just also, one of the things he didn't do was take questions. And I think two relevant questions, and one is what you brought up. What's the compensation? Are you going to take money out of this company? I don't know if he's taking compensation out of it. That would be one I would ask. And he didn't answer, didn't take questions for God knows why. Usually you take questions, right?
Yeah,
unless you're looking to hide the football a little bit. Number two, are you going to dilute shareholders more? And I think, these are things that when companies don't take questions, you gotta Remember Paramount didn't take questions?
I'm glad you're bringing up Paramount. Both Paramount and Warner Brothers Discovery are hitting 52-week lows, could be even longer than that. $7 and a penny, the low of the session for Warner Brothers Discovery today.
Meantime, GameStop shares down 12% after the company's shareholder meeting failed to offer any real details on its business strategy. That's
what a
surprising.
surprise. That's so weird.
Why is that a surprise?
Can't believe that.
And we'll end with a check on shares of GameStop, which are down now another 3.5%, now 2%, just around 700,000 shares of volume, following up on a 12% drop yesterday after the video game retailer and original meme stock did not offer much in terms of detail about its future strategy during its highly anticipated and delayed annual shareholder meeting. That meeting, by the way, only lasted about a half an hour, and no shareholder questions were made in terms of their way into the agenda. So, Joe, GameStop following, remember, during the regular session, we hit an intraday high of nearly $65 per share in this latest iteration of the meme stock craze, currently trading at $24.78. I'll send things back over to you, Joe.
Let's quickly cover some important points after this week's annual meeting of stockholders and the financial media's reactions. First, I think it is somewhat misleading to say that individual investors were displeased with the words of Ryan Cohen, given that GME was dropping in price well before Ryan ever began speaking. It's also interesting that the price of GME was moving down just enough to not trigger an LULD halt. It's as if someone wanted the price action to look as bad as possible on the charts, but they didn't want to trigger a volatility halt on the way down. That price action did not look organic at all. You may remember that leading up to the meeting, I said many times that it was important to have realistic expectations. I was not expecting any announcement of a merger or acquisition so soon because M&A takes time. Also keep in mind, annual stockholder meetings are typically not when companies announce big news. Rather, these meetings are more of a legally required, check-the-box type of meeting that every publicly traded company must host for their shareholders. So with this in mind, it's not surprising that we didn't hear any big news at the meeting. With that said, I am optimistic and excited to see what GameStop does with the capital in the days and months ahead. With roughly $4 billion in cash, they have a real opportunity to transform the business in a meaningful way. In the short term, they are focused on cutting costs and improving operational efficiency, and that makes sense because that should be the first item they address. Once GameStop has a solid foundation and is both operationally efficient and consistently profitable, then it makes sense to move forward with driving revenue growth, whether that be in the form of an acquisition, investments, or something else. Another important point that I want to mention is that, up to this point, Ryan Cohen has not accepted a salary from GameStop. He has purchased GameStop stock with his own money, and as he has said in the past, either the company turns around or he goes down with the ship. I think it's important to keep this in mind and remember that Ryan's incentives are very much aligned with shareholders' best interests. Now, what's next for GameStop? As Ryan said, a smaller network of stores with an expanded assortment of higher value items that fit into GameStop's trade-in model. It seems that at least for now, GameStop is really hammering down on reducing costs and pushing hard to offer unique physical items to their customers, whether that be graded Pokemon or sports cards, unique controllers, or other collectibles and physical items that are difficult to find at other retailers. It seems that the company really want to push ahead into the collectibles market. I think the GameStop NFT marketplace is a testament to that fact. Of course, the NFT marketplace has been discontinued due to regulatory uncertainty in the United States, but the point still remains. GameStop is pushing hard into the collectibles market. Now, whether they will continue in this direction with the recently raised $3 billion or pivot and do something else, I don't know. Larry Chang did post on X recently talking about how companies evolve and change substantially over time. So maybe the board does have something different and unique in mind for the capital. We'll have to wait and see. Ultimately, I want GameStop to survive, to thrive, and transform its business model in a meaningful way. And as I often say, when it comes to the financial markets, what individual investors want is simple, and nothing we're advocating for is beyond the realm of reason. Individual investors want a free, fair, and transparent stock market. We want large institutions to be held accountable for their actions. We want individual investors to have access to the same real-time data from exchanges' better private feeds, which is currently only available to the large firms on Wall Street. We want short sale data to be reported in real time. We want an end to excessive amounts of failures to deliver, and we want entities who fail to deliver on their obligations to be held accountable. We want an end to payment for order flow due to the insane conflicts of interest it creates. There's a reason why so many other countries have already banned it. We want the exchanges to be not-for-profit utilities as they once were. The exchanges becoming for-profit ventures has created so many conflicts of interest at the expense of individual investors. We want increased competition among market makers, and we want all of individual investors' orders to be routed directly to lit transparent exchanges rather than opaque alternative trading systems known as dark pools. Ultimately, it's simple. What we want is a stock market that offers a truly level playing field for all investors. Please leave a like on this video so more people will see it. And while you're down there, please consider subscribing. It's free, and you can always change your mind. Thanks for watching, and hopefully I'll see you in the next video.